Hello, everyone. This is Chris Marco from IATA, and I would like to welcome you to the 17th Maintenance Cost Conference. Again, it's going to be virtual this year. So I hope I have some issues I see with my camera. At least you can hear my voice. Just a few logistic things before we get into the presentations. First of all, this session is going to be recorded and will be available to you. Your microphones are automatically muted. There will be one poll that once you fill it out, just submit once you have selected your answer. And to have questions addressed to the presenters, please use the chat function on the right of your screen. Just remember that we will take questions at the end of after each presenter provides his own presentation. So you will have the opportunity to ask questions at the end of each specific talk. And we'll move with a few words about the competition guidelines. So of course it's a webinar version, so I don't think you can interact much with each other, but just be aware that you cannot exchange information about pricing, fares, charges, commissions, how you divide customers or markets, any of the commercial plans that you have, or you cannot discuss about some group decisions against someone, or to create a consortium and work on something. You have to be really very careful and deal things like that with your lawyers. Also, all the relations with the industry stakeholders need to be kind of carefully prepared, and things that you think that may affect your independent business decisions or competitors. Just these are kind of general guidelines that you see there. And if we can move on. So just to let you know that the Maintenance Cost Conference, the MCC, and this is the 17th year we run it. It's a group where a number of airlines and other industry stakeholders get together. They exchange information about the MRO status and also provide various views and methodologies and standards about how you can capture, you can allocate costs that they are related to the business, to the airlines, the aircraft itself. We have the detailed tool set that we use, and this we would like to be the standard industry methodology, and we are more than willing to work with any of you to work it with your providers in order to be part of your system. Because even if you do not want to share any data, it's good to keep a consistent way to monitor your cost and your performance in general, because the tool set captures other information on it. All this can be found at the IATA website. So if we can go to the next slide, the next episodes will be in the following 3 Wednesdays of September and getting into October. And if you would like to register for each episode, you have to go to the link. The slides, as I mentioned, will be available at the end of the presentation. So in the next slide, we will have the speakers that we have with us today. We have the poll, and then we'll discuss about the impact of COVID in the industry, in general, the state of the airline industry and the outlook. We'll have a presentation about the fleets and the utilization of the aircraft, and then we'll hear about the aviation restart and how we can manage the aircraft safely returning to service. So our speakers today, we have Dr. Adam Pilarski, who is a senior VP with Avitas. He has been with us in many earlier sessions. You may know him. We welcome Adam again. Michael Moosberger is our senior economist at IATA. Welcome, Michael, in this. Thank you for participating. Andrew Doyle is the senior director at Sirium on market development. Andrew has also participating in our webinars for a number of times, and thank you, Andrew, for supporting this effort. And finally, we have our airline representative for some more down to earth, let's say, on what they do at Virgin Australia. We have Keith Fernandes, who is the manager of fleet engineering, and he's also the maintenance cost technical group vice chairman. And with this, we move on to our poll. So please take a few minutes, just 1 minute, to look at the question and submit your answer, please. Once you click on it, we will have the presentation. And show you the results of the poll. Just a few more seconds. Remember to click and submit. So as we prepare to see the results, everybody's waiting and anxious. Okay, so we have 46% saying that it will be after 2024. 39% they see that this is coming after in 2023, and only 16% about the industry restarting or the travel demand will be back in 2022. Thank you all for voting on it. If you would like to see, these were the data and the results we captured in the previous presentations that we had last year, the previous MCC. So we will incorporate the new results in the final deck that we are going to receive. So as you see here, at that time, most people were predicting that the industry will be back in 2023. Now we are pushed back by at least a year from your answers. So let's go back to our presentation and our esteemed speakers, and we start with Adam. So Adam, with no further introduction needed, the floor is all yours. Thanks again for participating.
Thank you so much. I hope you can hear me. I am glad that there are a number of people who are listening today who are very upbeat and believe that everything will be wonderful next year. We'll have 2019 level next year. Of course, some of these could be domestic airlines, and I agree that for domestic, there's a good chance that next year things will be fine. All of traffic, my vote would be, you will see later, and not as optimistic. Thank you, Chris, and everybody and Geraldine and everybody who listens. I will not go over my 15 minutes. I promise you that, and I hope the technology will stay with us here, and I hope also that this is the last time we do it through computers and not person to person, face to face. Next. So can you go back one, Geraldine? Impact of COVID. Next. Not good. I know this is a big surprise to you, but obviously COVID is not very conducive to travel, to meeting people, to face. All of this is about as bad as you could imagine. Next. In general, I will give you some of general thoughts, some short-term considerations, and long-term considerations. Don't go that fast. You will, I think Michael will give you the official IATA view, so I decided not to compete with him and not to have my forecasts. And IATA and their staff and Michael are well known and well respected, so I'm glad you are getting the real view from a really responsible person. Next. There's something called the 12-step approach that some of you may be familiar with, and I hope not, but those who are know that if you have some problems, you can handle it through a 12-step approach. And the first step is you have to accept the reality that there's a power greater than you. Now, usually it means something like a deity or some spiritual being that is above you. But in this case, next, virus is the greater power. I'm sorry, all our forecasts depend on what the virus will do. That's why when it started, when we had the lockdowns, I came with forecasts that we will get back to 2019 levels only by 24. And many people said, no, you exaggerate. Well, the fact is, we don't know, because we don't know enough about the virus. We are finding out every day, but there may be another letter in the Greek alphabet. Chris will explain that to you, what comes after Delta. Go on. Next. No, you went too fast. Trust me, I'm a doctor. The problem is I'm the wrong doctor. I'm a PhD, so I don't know how fast the virus will disappear. And because of this, all our forecasts are conditioned on what the virus will do, and we don't have control over it. Next. So my best guess next is by 2024. There are some things that we already know. We know which way they will happen, and we have some idea Go on, next. What do we know? We know that domestic travel returns way ahead of international. We have good evidence of it. US, China, many other places, domestic doing much better. And because of this, 2022 is a reasonable guess if you're only flying domestic. Go on. Next. We know that direct flights will come back ahead of hubs. If you limit connecting times, if you limit meeting with other people, that works better for our circumstances now. Go on. But because of this, we know that narrow bodies are doing better than wide bodies. And this is in terms of retaining value and so on. It doesn't mean that aviation is over, but it may be changed, and at least for the short term, narrow bodies, again, are doing much better than wide bodies. Next. Unfortunately, worse may be still ahead of us, at least from a financial point of view. So even those who believe that we will reach 2019 levels by 2024, but even if we reach it by 2024, it doesn't mean that airlines from a financial point of view will be in the same situation. Your expenses are going up. You have additional problems that you didn't have before. You have to spend more on cleaning. You have much bigger expenses from a safety point of view. But also, unfortunately, business traffic is affected more severely than leisure traffic. And okay, you jumped, and that's okay. No, go on, since the cat is out of a bag. Okay. They are long-term serious questions, namely future of business travel. There are some people who are saying we will no longer have big meetings with many people coming together. So, for example, conferences, the air shows, in general, business meetings, now that we learned how to handle it on a computer, do we really want to go and see people and take chances? And it is a big question. I think that it will take a number of years before we get back to previous levels. Go on. Next. Another big question is future of leasing. Leasing right now is gaining strength. And the reason it's gaining strength is because lessors have money and they can finance airlines. Basically, it's a way to providing financing. It's not that lessors want to grow their influence, some do, but they are reluctant providers of financing. It's not their main job to provide financing to the industry. but they cannot get out. They bought many planes, and airlines are willing to take this, sale leasebacks and so on. All of this is becoming really dominant. So the share of aircraft leased in the next few years can only go one way, only up. It's not planned, but this is how it will happen. Trust me. Next. 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 Okay. Provide financing to airlines. Next. It will have a big impact on orders, but even on the design of airplanes. Lessors want different kinds of airplanes than airlines. They want everything similar, so they can move an aircraft from one customer to another. Airlines want their specific design for themselves. And this will be changing. Lessors will be more important in the next few years than airlines in selecting what kind of planes we are flying, we are building, we are designing. Next. And big thing, role of government. Governments helped the industry survive in really dire times, but that cannot continue forever. And of course, this also means that, especially in Europe, governments will interfere into the operation of airlines. And they will tell you where to fly, where not to fly. You shouldn't fly, when you can take a train, you shouldn't have flights. If you can walk, don't fly. It's a nice walk from New York to Los Angeles. Maybe you should walk. Next. Important to people like me and Michael and most people who try to predict the future is that right now traditional models do not work. Obviously, when the economy is doing well, people make more money, they can afford to fly. That's history, but the virus messes it all up. So for the next year or two, as I said, my first point was the virus is in charge. These models that we have do not work right now. It doesn't mean they are useless. They will be relevant again when the virus disappears. Next. Next. Okay. It's a fabulous time for experimentation. We are trying new medicines with the virus. We are trying different vaccines, but we are also trying different business models. There are new airlines that are starting, and we'll see how successful they are. We will, Airbus and Boeing have very different philosophies in terms of returning to high level of production. Airlines have different philosophies. It takes time to get the planes ready, to get the crews and so on. So for example, in the US, United is much more aggressive than other airlines. in assuming that travel, especially business travel, will come back, and we'll see how it goes. The interesting thing is this is the time of experimentation. There are new airlines, new airplane times, we'll have new fuels. It will be an exciting time. I'm a firm believer in high speed, so I don't have to spend 18 hours going to China. Good things will be happening to all of us. Next. Next. Thank you for listening. Please be safe and sane, and I'm ready for questions. And I stayed within my 15 minutes, I hope.
Yeah, good, Adam. Thank you very much for your beautiful presentation, as always, and your insights. Uh, some question for you is uh, what are your thoughts about from the environmental impact, and how is that going to affect the designs of the new aircraft in the future? Also, who will fund? We all know that the new airplanes that are coming up, uh, that came up the last few years, they are improving the fuel consumption by 15% or so. And however, they are significantly more higher in price than the previous generations that they replaced. So how is this effort going to be funded? So it's a multiple question, but it's related to the environment and the new airplanes. What are your thoughts on that?
Number of thoughts. One, environmental factors are with us, will stay with us. I am fairly confident everybody accepts it. Even the US government is beginning to accept it. It will have a tremendous impact. There is huge amount of new work being done, and I'm not an engineer, but I am amazed how fast things are progressing. And it's different, that's what I was saying, different kinds of fuel. Electric, there may be big breakthroughs. I know it's a different industry, but number of years ago, very few people or nobody believed that we'll have electric cars. And in the US, Tesla came with these very expensive, fancy cars. I think the future in car manufacturing today is very obvious. It will be all electric, and it's already going there. And even the Tesla cars are much cheaper now, and that you can go across the country and the computer tells you where you can get more power, how long you will wait there. It will happen. And yes, over the last 50, 60 years, we were only concerned about marginal improvements. How can we make the flight another half a cent cheaper per RPK or RPM? This will change. This will change. People can afford to pay more, and people will pay more, especially if the government forces you. And if you think about it, many of our European friends, I mean, number of years ago, going from London to Prague, the ticket was less than a drink in a bar when you get there. There is no reason for that. There's no reason why we have to only go one way and try to make it cheapest flights possible. Yes, we people will be willing to, we humanity will be willing to pay a little more for newer technology, for technology that is not not destroying the environment. I'm a firm believer in it. I think it is happening. It will be happening. There's no doubt. Now, financing, there will be no problem. There is plenty of money available. And when I talk to, for example, some of the new people that are coming in, both high speed and electric flights and so on, they don't have problems raising money. They have too much money. There are enough people, there's enough capital to invest into the future, especially now that it's, as I said earlier, it's time for experimentation. So from some point of view, these are very good times. I don't live the daily life of an airline, so I don't face the daily problems, but kind of next few years tough, then we're ready for the golden future again. Chris?
Thank you so much, Adam.
Okay, sorry, I didn't know if I put you to sleep or suddenly you were very quiet.
No. I'm still listening. I'm just thinking about, and also another thing is the hypersonic airplanes that some people are also investing in. So
Yes.
you think that they will be environmentally friendly too, or not?
There will be eventually environmentally friendly, and the same way as Tesla came in, you start with very expensive flights, but once you have enough people flying, the new technology will be developing very fast. I was last weekend in Denver, and I visited Boom, which is producer of new airplanes that will be like, you know, supersonic. And there's a real plane sitting there. They are really doing things. This is not maybe. This is a reality in few years. Future will be good.
Thank you, Adam. I think with this, we'll wrap up. We thank you again for being actually even in the opening of this MCC series this year. Appreciate it. And hopefully we'll see you in person next year. Hopefully.
I hope so too, and happy holidays, since I didn't see you for a number of holidays now. Also for the future. You guys will mute me now, right?
Yes, I think we will mute you. Yes.
Okay.
Okay.
Make me disappear. Thank you.
Turn off your camera for bandwidth. Thank you again, Adam. We always appreciate your insights and thoughts.
Michael, no.
Yeah, now we have Michael Moosberger, our senior economist at IATA. So we are looking forward to your presentation, Michael. All yours. Thank you.
Great. Thanks a lot, Chris. And thanks, Adam, for opening us up as well with really interesting thoughts there on sort of some of the challenges and some of the outlook and some of the exciting possibilities that also are emerging. If we could move forward to the next slide, the beginning of my presentation, just to give everyone a bit of an idea of what we'll cover. Firstly, an update on the airline financial situation in general, then looking in some of the recent developments we've seen in the traffic recovery. And the final part of the presentation will be looking at some of the factors affecting the outlook and also what that can mean for both operational and financial performance going forward. So as I run through, feel free to also, as you did in the first session, post any questions in the chat, and Chris can pose those after the presentation. So, I mean, as Adam said in the beginning, COVID-19, not good impact for the aviation industry. And as you can see on this slide here, airlines have by and large managed to survive through this, through 2020 and into 2021, but it's been at the cost of taking on a lot more debt or finding ways essentially to cover the huge revenue shortfalls that they've had over this period so far. In this chart, you can see here the dramatic increase in debt, which airlines faced at the end of last year. Airlines have continued to have to raise capital in various ways through the course of this year as well, so that challenge only gets larger. And those debts, that money will need to be paid back in the future, so it will continue to weigh on the industry for many years ahead. Now, if we look onto the next slide, there is some progress being made of recovering from a financial perspective. You can see on this chart here the operating margin at the global level for airlines, and clearly a very dramatic dive during 2020. Now, as we look into some of the results coming through for the second quarter of 2021, we have seen some measure of improvement. Unfortunately, still very much in negative territory, but operating losses in the second quarter sort of reduced to around 20% of revenues. So it's moving in the right direction, but there's still obviously a long way to go to return to full profitability. The next slide, we can see some of the regional variation of what we're seeing across the world. And this analysis here is based on, again, quarter two financials. This is for a sample of 40 airlines, so it's not necessarily fully representing the whole industry yet, but it gives us initial view. And as you can see, that there is overall some movement towards positive cash flow generation now, particularly in North America. Also in China, these, again, as Adam sort of mentioned earlier, the larger domestic markets are recovering or performing better in this early stage of the recovery, whereas the markets and operations geared to international traffic are still lagging behind. You can see here that there is some positive movement in the second quarter towards generating cash that can not only cover the operational expenses, but also start to pay back or pay down some of those debt obligations. But it's by no means universal, and we see in Latin America and in Asia Pacific, they're still lagging behind on those metrics. So that's a bit of an overview sort of on where we're at on the financial side. Just moving now into what we've seen in terms of the traffic. Firstly, there has been more of a strong recovery in the domestic side, which we've also touched on in Adam's presentation. International is still lagging behind, really restricted by the government sort of policy on travel restrictions between countries. This chart is showing actual data up until July, and then we've got the dotted lines are showing a view based on forward bookings that we have. So there has been an uptick, obviously, through the Northern Hemisphere summer, but there is some risk that maybe this is stalling or flattening out over the months ahead. So we need to keep an eye on that. If we look at some of the main route areas on the next slide, we can see that actually that improvement has been quite narrowly focused. You can see at the top of this chart, which is showing the proportion of RPKs in July compared to July in 2019, so pre-crisis. That North America to Central America route area has actually dramatically, improved compared to other regions. We're also seeing within Europe some improvements there that are stronger than other route areas, again, driven partly by the rollout of vaccine certificates or universal vaccine certificates in Europe, which allows some more easy coordination of movement within that regional context. But the overall message, I guess, is that the international recovery is still weak, and what recovery there has been is quite narrowly focused on some particular route areas. It's not broad-based. On the next slide, we look into a bit of the domestic picture, and what we have seen here is, although there's been pretty robust recovery, particularly in the US, China, there has been dips in that, and that's largely due to the COVID situation within countries. You see the red line for China there, which had a dip back in February, and we've also seen, and we're expecting to see in the traffic data coming through for August, quite a substantial dip again for China, given the measures that were taken to control virus outbreaks in China last month. However, although they do dip, we do see that the domestic markets do rebound again pretty fast once the pandemic is under control. So that we still expect to see the developments in domestic market be positive, and through the course of next year, seeing recovery of domestic travel in 2022. On the next slide, I'll just touch briefly on the load factor aspect, which of course is a really important element of the financial performance also for airlines. Airlines really need to be bringing back their load factors, matching the capacity to the demand well in order to have hopes of being profitable again. So domestic load factors have actually returned quite close to pre-crisis levels, as you can see by the blue line in this chart. International load factors are improving, but still lagging behind, and there's still some way to go on that front. Just finally, on the traffic side, I mean, the next slide, the good news, or at least the relatively good news story out of the traffic side has, of course, been cargo. This chart is showing in the blue line there the seasonally adjusted level of cargo ton kilometers globally, and you can see actually that it's actually above what we were seeing, the levels pre-crisis through the course of 2018, 2019 there. So, there's been strong demand for cargo. This has been, particularly for airlines that do have a cargo operation, it has been a way that they've been able to generate revenues and to help, soften the impact of the fall off in passenger operations. However, for most airlines, that's still a relatively small part of the overall picture, so it's by no means enough to fully offset the losses seen on the passenger side. But still, positive story there for cargo, and we expect there still to be continued strong demand for cargo into the future as well. Now, if we shift gears slightly and just start, give us a recap of some of the main drivers of what affect the outlook, and the first one just wanted to touch on was the underlying macroeconomic situation that affects the demand for travel. And one of the measures we look at is accumulated savings for households, and that helps influence their propensity to spend on things like travel. And we do see that in a number of more advanced economies, there are quite significant levels of accumulated savings. People have, through the course of the pandemic, if they've remained in employment, they've probably actually been able to accumulate savings, haven't been spending so much on the discretionary goods and services that they might have otherwise. So, you can see there in this chart, US and Canada, for example, in excess of 10% of GDP in accumulated savings, and we expect to see, a spending down of that accumulation over the next couple of years, which will help stimulate again the demand for travel. Of course, on the next slide, as Adam also mentioned in his presentation, the virus has a large extent of control over what we're going to see in the future. And this chart showing the patterns of new cases essentially by major regions. And unfortunately, the most recent data is showing that cases are rising again. We are seeing some divergence now between rises of cases and not immediately be converted to large rises in hospitalizations or deaths. So there is evidence that the vaccination activity is helping to break that chain, but it still has been and will continue to be a key driver of the outlook, is how to control particularly variants of the virus, and to what extent vaccines that we currently have are effective against those, or what the sort of innovation process will be for vaccination going forward against new variants. So that's also something that we keep an eye on, and is is a challenging element into the forecasting mix. The next slide shows the what we also look at in terms of vaccination rollout. So if we look at that slide that's coming up in a second, hopefully we will have a picture there of how the vaccination timelines for different countries do differ. I'm not seeing the slide yet, but there we go. Great, excellent. So one of the key drivers, of course, of travel, the possibility to travel, is the government's restrictions on movement of people, and we in our forecasting work look at what the vaccination rollout timelines are, which we then expect would have some bearing on how governments will take decisions to relax travel restrictions. And I guess the overall message that I want to share here is that there is quite a wide range of these timelines depending on the country that you're looking at. And this chart is showing a set of forecasts from a group called Airfinity, which is an expert science consultancy that we use their forecasting service as an input to our traffic forecast. And you can see towards the bottom of the chart, there's some shorter timelines there of getting coverage of the main parts of population in countries like, Chile was quite leading the pack, US, EU, through the course of the summer in the Northern Hemisphere here. But as we go further towards the top of the chart, those timelines do extend out through into the course of next year and through 2022 as well. So this will create a range of speeds of recovery by market depending on how quickly those vaccines get rolled out. And so there's by no means a sort of universal recovery pattern across the whole world. On the next slide, with this one here is looking at our the level of travel restrictions again that we're seeing by region, and by and large those international travel restrictions are remaining quite high. We have seen Asia Pacific continuing to be very conservative in their approach. Governments there are not quickly taking steps to reduce those restrictions, and we expect they would continue to hold in many cases through the course of 2022 as well. But we have seen in Europe, and the yellow line there, some downgrading of the restrictions, but overall, of course, there's by no means full freedom of movement yet, even within Europe. So these really, it is these decisions that governments are making on how to how and when to reduce these travel restrictions, which are going to be the key sort of the key gate really that opens, that allows the pent-up demand that we're seeing evidence of for people who want to travel to be able to do so. So this is really, these policy decisions are going to be a key trigger of when and how fast the full recovery happens. And an example of that, just on slide 14, as the next slide here would be here's an example we've seen of travel between the UK and Portugal, or at least the bookings between UK and Portugal, where we saw just the quite dramatic impact of when governments change the rules for who can travel, or what sort of quarantine measures are required for travel between different countries. You can see in May, the UK announced that Portugal will be added to their green list, so it reduced the need for quarantines, and there was a dramatic increase in the booking activity immediately after that announcement. But through the course of early June there, that decision was reversed, and also the bookings fell off quite dramatically again. So we do see the pent-up demand when people have the opportunity to travel without restrictions like quarantines. There is a substantial pickup, but it is fragile. So it is closely geared to those decisions that governments make on travel restrictions. So just the last couple of slides here, I just want to summarize, what does that mean all in all for the outlook. So looking again at the global level in terms of passenger numbers and the recovery, the blue line on this chart, the solid blue line here, shows our baseline forecast for the recovery in global passenger numbers, and our current view from July is that we would see a recovery at the global level in the 2023 timeframe. But as you can see from the yellow area on this chart, there is a significant range of uncertainty and probably more downside risk than there could be on the upside. And that downside risk, linked to what's going to happen with additional variants, maybe of the virus, and in particular, how risk averse are governments going to be in terms of relieving or reducing those travel restrictions. Now, that overall picture does differ by the split between international and domestic. So on the next slide, just breaking that down briefly. So we have in the blue line here, the domestic forecast, and our view is that we could well see reaching or even surpassing domestic travel numbers next year in 2022. Whereas in the red line, you can see for international, that will lag further behind. Again, related more to that the government policy decisions around the relaxation of travel restrictions. And so it would be more the 2024 period that we would expect to see a return to 2019 levels. And on the final slide, summarizing what that overall could mean for the financial performance for airlines this year. We are expecting quite a significant improvement in financial performance this year, but still in negative territory this year, with losses in the range of around $40 billion in 2021, and it's likely to be into 2022 and beyond that we would see a return to positive territory again. So that's just an overview of some of the financial situation that we've seen, some of the main developments in traffic, and the elements of the forecast, that are driving the forecast that we keep a close eye on. So I hope that's helped to provide some context, and happy to take some questions on that. Thank you.
Thank you very much, Michael, for your presentation. Please remember to use the chat box. If you have any questions, please type them in, and we'll provide them depending on time. Some question, Michael, for you is about the cargo that has been expanding or booming, as you mentioned, or at least it's keeping up and becoming better. The question is about there's a number of passenger aircraft that have been converted to freighters during this time. So what is the expectation when in a couple of times that the industry recovers and there is no more available belly space? However, a lot of space that these aircraft are being utilized for, they will not be available. Is there any, are there any thoughts, any kind of analysis done on this, the impact of those freighters, airplanes, and the belly space?
Right, yes, that's a great question, Chris. And yes, I mean, pre-crisis, I mean, more than half of the air freight was moved in the belly of essentially mainly wide-body passenger aircraft that are flying and providing the connectivity for both passenger and cargo operations. And that has changed dramatically during the crisis. There's been obviously a much smaller number of wide-body passenger flights, and we've seen an extensive pickup in the utilization of pure freight aircraft, freighters, that have helped to bridge the capacity gap that there was and still is to some extent for cargo operations. But as you say, the other dimension has been the usage of essentially aircraft configured for passenger operations in normal times, but using the lower deck for flying cargo and actually not flying passengers at all on those flights, and in some cases actually loading freight into the passenger cabin. We have seen obviously a big development of that during 2020 and the early part of 2021. Our expectation is that as the passenger movements start to pick up again, as people are able to move more freely, that airlines will be shifting the cargo traffic into the bellies of those aircraft, and this so-called Prater phenomenon will reduce over time through the course of the next few years, and we'll see a more normal resumption of using of the wide-body aircraft for the longer haul freight in combination with the pure freighters.
Thank you, Michael. Another question is about the Amazon, the Prime Air airline that now it's developing. Do you see like them doing a lot of conversions on other aircraft, or and that fleet being increasing, or maybe utilizing and ordering new aircraft from the beginning? Has any analysis or any thoughts on this, and what would be the importance of Prime Air in the whole cargo business? Because right now, a lot of their packages are delivered through UPS, FedEx, but now they're developing their own airline. Any thoughts?
Right. Well, clearly the e-commerce, the uptick in e-commerce activity through the course of the pandemic has been a key aspect that's been supporting the cargo traffic, and that's a growing segment. We have been doing our analysis more at the sort of industry aggregate level, so looking at the flows in aggregate. I haven't been looking at it particularly from airline to airline as such, but I would say overall that the e-commerce, the growth in e-commerce activity will provide a broad-based, opportunity for all airlines that are operating cargo operations. But as you say, as maybe some of the key e-commerce suppliers are developing their own capability, there could be some shift towards sort of basically bringing that in-house for themselves, which would shift the share of that traffic.
Thank you, Michael. There is a question if IATA has a forecast for the EMEA region, Europe, Middle East, Africa region. Is that available? Did you do such a forecast in your area for specific regions?
Yep.
And they are available for you? They can send you an email?
We do forecasts for both the sort of passenger specific forecasts, and also looking at it from sort of airline perspective as well, from those regions that would involve the passenger and freight side. We do publish those on our website for the airline sort of aggregate forecast for this year, and there will be an update for 2022 coming later in the year as well. So yeah, I'd be happy if anyone wanted that information to drop us a note, and we can see what we can provide.
Thank you. One of the attendees is asking about the international route recovery in 2024, and is the forecast about early 2024 or late 2024? Can you mention anything?
Right. Our forecasting that we're doing is on an annual basis, so we're not in our exercise pretending to go down to a more granular level of saying exactly when that's going to happen through the course of a year. But my expectation would be that, as we go through the course of 2024, we would see, the aggregate passenger flows becoming close again to what we saw for the total of 2019. So through the course of 2024.
Thank you, Michael. And one last question, as we're approaching time, is about your forecast and the numbers that you showed us from 2019 to 2023 and so forth. And in your observations, can you comment on which region would lag in this recovery, and what are the regions that will probably fare better during this time?
Yes. Yeah, it's a great question. Clearly, there is regional variation and a couple of dimensions to consider there. And as Adam also mentioned in his presentation, regions that have large domestic markets are going to be the ones that see the steeper recovery and the earlier recovery. Whereas regions that are more geared to international travel within their region are going to lag. So I mean, the two sort of contrasting examples would be, North America, large domestic markets, faster recovery, potentially through the course of 2022. Whereas, for example, Europe as an example of being highly geared to international travel within Europe is going to take longer, probably more in that 2024 period. And then Asia Pacific is kind of maybe an interesting mixture of the two, some large domestic markets there, which helps, bring forward the recovery, but also still a large proportion of the traffic within Asia is between countries, and governments there are very risk averse in terms of opening their borders. So that's going to delay that international component. So that gives a bit of a flavor maybe of a couple of extremes. US or sort of North America faster, Europe towards the latter part, and maybe Asia Pacs somewhere in the middle.
Excellent. Thank you so much, Michael. And with this, we conclude your part of the presentation, and we appreciate being with us today. Thanks again.
Thank you, Chris. Thanks, everybody.
And with this said, we move to our next speaker, Andrew Doyle, who is the Senior Director for Market Development at Sirium. So, Andrew, the floor is all yours. Welcome.
Thank you very much. Thank you, Chris. Thank you very much indeed. I'm very pleased to provide an overview from the supply side now that we've seen all of that insight around what's happening in terms of demand. So we're going to take a look at the fleets and utilization. Please do send through any questions that we can address at the end of the presentation. Next slide, please. So just a very brief overview of the Sirium mission for those of you who may not be familiar. We support all of the major stakeholders in the aviation industry and allow that data to flow around where it's needed from all of the various silos, and enabling those insights to be released. Next slide, please. So we're feeding many sources of data into the Sirium core that enables us to release various insights. So we're making thousands of updates to the fleet data on a daily basis, flight status, schedules data, etc. Next slide, please. So let's just take a look at the basic storage versus in-service data. So we're looking at passenger jets here, and you can see there's been a pretty steady increase in the number of aircraft back in service since the early part of this year. So this is looking at single aisle aircraft, wide bodies and regional jets. So just to break this down a little bit, that's showing now about 23% of the global passenger jet fleet having in storage status as of today. However, for the narrow body aircraft, we have about 14,000 aircraft in service and about 3,500 in storage. So actually only about 20% of single aisle aircraft are currently in storage status according to our criteria. In contrast, on the wide body side, we have still about 32% of wide bodies in storage, so about 3,300 in service and just over 1,500 stored currently. We put the regional jets actually almost exactly in the middle of that, around 26% of regional jets in storage, which is a little over 3,000 aircraft flying and just over 1,100 in storage. Next slide, please. So here's a look at what's happening with the top 10 storage locations for passenger jets. So we've heard in the previous presentations about the recovery of the large domestic markets, the US, of course, and China in particular. We've seen some other regions begin to recover over the course of the northern summer, Europe, for example. What we've seen in terms of the storage locations is those large US sites, Roswell, Marana, Kingman, Victorville, have really seen a significant decline in the storage inventory. Number 5 on the list is Jakarta, and number 7 is Kuala Lumpur. So that really is reflective of the challenges in those particular regions. You can see we have a European location there as well at number 9 in Spain. But the bottom half of that top 10 list is showing a more gradual reduction in storage inventory, although they all are seeming to be starting to reduce at least a little bit. Next slide, please. So we've also already talked quite a lot about the different fortunes of international operations versus domestic. So what we're looking at here is the change in daily flight numbers for passenger jets split down between domestic flights. You can see there in red and, sorry, in green, I should say, and the international flights in red. So if we look at the situation compared with 2019, domestic flights are down around 20%. So this is showing data actually up to and including all the flights that landed up to midnight UTC on Sunday, just gone, the 12th of September. So just prior to that, you can see that dip in the domestic flights, which is showing what the impact of more COVID outbreaks in China was having, some restrictions on travel there. That has now come back again, but the trend in the last few days, as you can see there, is edging slightly down again now that we're past the northern summer. In terms of international, unfortunately, we're still more or less about 50% down in daily flight numbers for passenger jets compared with 2019. Next slide, please. So here's a view of the number of passenger jets tracked daily by the operator region. So how many passenger jets do we actually see flying each day, and how is that comparing with the level of 2019? You can see there the percentage change versus 2019. I've taken 7-day averages here just to smooth out those weekly volatility of flights. So at the top there, you can see that China actually had in parts of the early part of this year was actually ahead of 2019 in terms of the number of aircraft that were active daily with Chinese operators. Again, you can see that dip around about August where the additional outbreaks of COVID occurred, and you can see that activity coming back again. So the USA briefly overtook China in terms of decline versus 2019, but China has just edged back again. But the US, with that very large domestic market, has seen the number of aircraft tracked edging closer and closer to the 2019 level. I guess it's down less than 10%. Europe and Latin America are gradually rising towards about a 20% decline again. Looking at the data in the last couple of days, we do seem to be seeing a slight drop off in activity, both in well, certainly in Europe, as we're now past that northern summer peak, and 1 or 2 travel restrictions still coming back in. Now, what's really clear here is the Asia Pacific region, excluding China. There are some real challenges there still with the number of aircraft active daily still down by more than 50%. Next slide, please. So this is a view of just 3 carriers that I picked in the different regions. So this is showing the last 90 days up to and including September 12, Sunday just passed. So the horizontal axis is those 90 days, and the vertical axis is actually each line is an individual MSN, so a unique aircraft within the fleets of these 3 carriers. So the green squares are where we track that individual aircraft making at least one flight. We show, you can't see it on this view, but we show the number of flights that each aircraft made on each specific day. But this kind of heat map view really shows the differing challenges by region, really. So AirAsia, of course, still very much subject to very significant travel restrictions in Southeast Asia. So there's a very low level of fleet activity, and a large proportion of the fleet not having flown commercial services at all in the last 90 days. EasyJet, there you can see the trend to increased utilization of the fleet during that northern summer, where we started to see some of the travel restrictions released, and a steady trend to more aircraft joining the operational fleet. And then JetBlue over in the US, you can see the last 90 days a very high level of activity for the vast majority of the fleet, although we may just start seeing a little bit of a drop off in that activity. Next slide, please. So while it's interesting to look at how many aircraft are actually in service, what is important to understand as well, of course, is how much are the aircraft that are in service actually flying. So here's a view of the daily flight hours, again, a 7-day average, rolling average, for those aircraft that are actually flying. So you can see there at the top, I've got the average flying hours per aircraft per passenger jet for 2019 equivalent, so it's almost at 10 hours. But what we're seeing at the moment, the green line there is for 2021, we're down to about the 8 hours level. So of course there is a big degree of variation between the different classes of aircraft, wide bodies, narrow bodies, regional jets, but overall, on average, we're a couple of hours down in terms of that daily aircraft utilization. Next slide, please. So let's take a look at the top 30 carriers by fleet size and how much or what proportion of their fleets they've been using. Again, this is looking at the 7-day period up until the Sunday just gone, so up until midnight, September the 12th. So, you know, a reasonably high proportion of aircraft seeing at least one commercial flight during that 7-day period. You can see some of the airlines that are down a little bit lower. Lufthansa, obviously in Europe, Air France, seeing challenges still in terms of those travel restrictions. Emirates as well, down at about 60%. Of course, you know, for reasons beyond the control of these airlines, but there are some airlines there that are seeing very high levels of utilization. Ryanair, for example, that's an airline that typically flies all of its aircraft at least once every 7 days from a maintenance regime perspective, not necessarily linked to the actual level of demand. Next slide, please. So this is looking at just the top 30 Asia Pacific. Again, the 7-day period up to and including September 12, proportion of the overall fleet tracked active, making at least one flight during that 7-day period versus the aircraft that didn't fly at all. So the large Chinese carriers there, obviously a very high proportion. Some of the other airlines that face particular challenges, Singapore Airlines, for example, Cathay Pacific, well-known challenges there in terms of lack of domestic markets. And then when you get towards the right-hand side there into Indonesia, Thailand, Malaysia, obviously there are still very significant challenges there to travel, which are resulting in pretty low levels of utilization of the fleets. Next slide, please. So here we're looking at a similar view, but this time by the aircraft mast series. This is globally. Again, the 7-day period to September 12th, what proportion of the global fleet of each of these master series did we track making at least one flight during that 7-day period? So you can see some of the newer generation aircraft at pretty high levels there, A320 Neo, A321 Neo. We know those newer generation types are tending to be favoured by airlines because of their efficiency. Same on the wide body side, the 787s, A350s, those newer generation aircraft with the significant belly cargo capacity. Some of the more legacy types that are still down at round about the 50% level in terms of fleet activity or below. We've got ERJ 145s, obviously predominantly used on US regional operations. 767-300, 777-200, 757-200, still seeing less than 50% of the total fleet with any flight activity in that 7-day period. Next slide, please. In terms of the age profile of the active fleet, we've taken the build years of the current passenger jet fleet. You can see there along the bottom. And again, we're looking at the proportion of each of those fleets by build year, the proportion that was tracked in flight in green in the 7-day period to September 12th versus the proportion that we did not track making a commercial flight. So you can see that's skewed towards the newer aircraft, again, because airlines will typically favor those more efficient types. When you get back to the 2004 and earlier build, we've got less than half of those fleets having flown in that latest 7-day period. In terms of the build years for 2020, so 2019, 2020 and 2021. So just on the previous slide, you could see the impact of the 737 MAX grounding had on deliveries for those years. We can move on to the next slide now. And here's a view looking at the engine master series. Obviously, this is very important for the MRO market and engine maintenance. So similarly, the 7 days to September 12th, here we're showing the percentage of tracked daily flight hours and how that compares with the 2019 benchmark. So you can see those new generation engines powering the latest generation of single aisle aircraft showing increases versus 2019 because a lot of aircraft have been delivered, of course, and they're tending to be used in service. The LEAP there as well, of course. Trent 7000 powering the A330 Neo. So I had to exclude the LEAP 1B here. I should just point that out because of the return to service of 737 MAX towards the end of last year. That would have it's been possible to show as a percentage change versus 2019. Just towards the end of that, on the right-hand side, you can see Trent 900, GP 7000 powering the A380. Of course, they've been significantly impacted because so few of those aircraft are flying. Next slide, please. This is a look at the block fuel estimates and CO2. So we did mention sustainability briefly earlier. We've developed a proof of concept methodology for modeling block fuel and CO2. So what I've plotted here is the decline in the tracked daily flight volumes compared with 2019 for passenger jets. Which you can see there in the green. The red line is the estimated decline in block fuel and or CO2 emissions. And you can see there that the estimated emissions have declined more than the flights have declined, which shows the impact of those newer generation aircraft being favoured. Plus, of course, there are changes in operational patterns towards using slightly smaller aircraft, but that's an interesting data set that we can now draw some interesting insights from. Next slide, please. I just wanted to finish with a very quick look at the Sirium fleet recovery scenario. So I won't talk through all of the detail on this page. We started off with well, my colleagues at Ascend by Sirium, I should say, our consultancy arm, developed 3 scenarios. These were superseded by 2 more scenarios. We call them scenario 4 and 5. The scenario 4 assumed that there'd be a gradual recovery in traffic from the 3rd quarter of 2021. We'd get back to 2019 level traffic by 2023 to 2025, but varying by region. Scenario 5 was the same as scenario 4, but assuming a faster rebound from the 3rd quarter of 2020. Next slide, please. So the upshot is that currently we're seeing the number of passenger aircraft in service increasing slightly ahead of that scenario 5 for the time being, which you can see in the thick green line there. We're only showing the narrow bodies, actual narrow body fleet and actual wide body fleets as those solid bars there. But you can see at the moment that is tracking slightly ahead of our 5th scenario. And next slide, please. If you want to find out more about those recovery scenarios that Ascend by Sirium offers, you can find those on our sirium.com/thoughtcloud website. And that's it from me. So very happy to take any questions.
Thank you. Thank you, Andrew, for your presentation. Could you track the conversions, and have you seen passenger to freighter conversions, and can you comment on that? Is there a significant drop, if you can share, not the numbers, but any trends that you might have seen on specific type of aircraft and so forth?
Yeah, so as has been mentioned before, there are a significant number of passenger aircraft that have been flying, carrying cargo on the main deck. But in terms of the conversions, there are a number of programs underway. Of course, the 777-300ER conversion program, which is just starting up. So I think the question is really, there will be feedstock potentially with the number of aircraft currently stored, but not knowing how quickly the passenger operations are going to come back. It's really just a question of when is the belly cargo capacity going to be there from the passenger flights. We know that cargo is doing very well at the moment, as Michael was showing, but will that be sustained if we do get a recovery in terms of passenger traffic? But there is clearly activity in the passenger to freighter sector, and there are aircraft being converted.
Thank you, Andrew. Please provide any questions you may have in the chat box, so we can ask the panelists. From the different from the utilization of the MAX aircraft have you noticed that the MAX, as it's been certified, is coming back as stronger than before with respect to utilization? Andrew, any comments?
Yeah, so I should have pointed out on the chart I showed with the activity by master series that the MAX is, it is coming back in a number of countries now. Of course, I think Singapore just recently, for example, approved the aircraft to return. However, China, I think, is still a big issue for that aircraft type because it's not flying in China at the moment. Obviously, there are a lot of aircraft there, a lot of operators. So I think for those airlines that are operating the MAX, they are at a high level of utilization with that aircraft. Obviously, it's a new generation aircraft, and it's operating at a high rate of daily utilization. A high proportion of the fleet is flying. So I should have just mentioned when I showed that chart that, of course, there are some areas it can't fly still at the moment. So that's going to be reflected in that data.
Thank you, Andrew. And one, I think, will be the last question, unless you receive something from the audience, about the Airbus A321 XLR. Since you are also keeping a track and an eye on the orders, can you comment on the orders between the MAX and especially the higher end of the MAX aircraft and the A321 XLR, for example, or the whole 320 family? Right now, the production levels of Airbus, are they significantly higher than Boeing? And the deliveries, if you can comment anything around the two manufacturers in the narrow body categories.
Yeah, so I guess, make some general comments. It's not something that I've looked into the data for very recently before this presentation, but there is discussion, I guess, going on in the industry about the capabilities of the A321 XLR. It's attracted a lot of orders, certainly pre-pandemic, and the assumption would be, I suppose, that there will be significant demand for that type of capability as the industry recovers. So I think Adam was suggesting, we would see more aircraft coming back on point-to-point routes, perhaps, rather than hubs. So clearly that aircraft is seeing success in the marketplace. Boeing has the large version of the 737 MAX, the -10. There are different performance characteristics, of course, in terms of payload range, capability. There was talk pre-pandemic about Boeing developing a new aircraft type above the 737 MAX that seems to have gone away for the time being. So I think we'll definitely see a lot of focus on those larger narrow body aircraft with longer range capabilities as the industry recovers from the current downturn.
Thank you, Andrew, and again, thank you for participating in our panel today. And with this, we appreciate your participation, and we'll go on to our next and final speaker for the day, Keith Fernandes, Manager of Fleet Engineering for Virgin Australia. So it's all yours, Keith, and thanks for participating and also be one of the most active participants in the MCTG as a Vice Chair. Thank you.
Keith, can you hear us? We cannot hear you for now. It looks like your microphone is not working.
Remember that Keith is all the way in Australia. Hopefully, he has not fallen asleep yet. We have some technical difficulty with Keith. We are trying to connect with him. Ah, there he is. Keith, we can see you now. Let's see if we can hear you. I think there's some issue with your audio. We cannot hear you. I think you may be okay now. Can you say something?
Okay, there we go.
Yeah, you're there. Okay, great. Thanks, Keith.
Welcome
Hi,
back.
everybody. It looks like I was muted by the organizer, but thanks very much and thanks for your patience. Welcome and good evening. Thanks for the introduction, Chris. And I have embedded a lot of airline experience into this presentation, but feel free to ask any questions into the chat so Chris can pick that up and I can answer the questions straight after the chat as well. Some of you may have seen elements of this presentation last year, but what I've done this year is I've taken some of our airline experience and shaped that into this presentation. So with that, I'd like to move to the next slide, please. So thanks very much. And this presentation is about safely managing aircraft return to service. In the past presentations, you've seen through Adam and through Michael and recently Andrew on the aircraft returning to service and how that uptick is happening across the world. Well, in our experience, this presentation is going to talk about three key elements. And the first one is about taking a comprehensive risk-based approach in managing unexpected change and identifying some of the risks. The second element will talk about continuing airworthiness during parking. And the third one will be about return to service strategies, which is a phased pathway for efficient return to service. So these three elements will be covered by the presentation going forward. So can I ask you to go to the next slide, please? Thank you. So there's a lot of data on this. It's quite a crowded slide, but the key takeaway from this one is if you manage continuing airworthiness during parking, you preserve the CFA or certificate of airworthiness, and it protects your valuable assets. And the first element that we looked at, all of us across the world were hit by unexpected change. So the pandemic that came our way, we were absolutely unprepared for, with the global grounding of the worldwide fleet, which resulted in all of us parking or storing airplanes at locations in as-is conditions. To add to that, we had the inability to park airplanes in conditions that are suitable, in a suitable environment. Here in Australia, a lot of our airplanes were parked along the East Coast, close to the oceans, close to water, which means we had a lot of moisture, salt content, humidity in the atmosphere. So we were really parked in as-is conditions in areas that were not suitable for parking airplanes. The next one was the inability to quickly transition those airplanes into a parking program due to high volumes. I mean, you take it. I mean, we had about 80 airplanes that we needed to park in to get into a parking program, and most of the airlines around the world had the same thing. So we just couldn't keep up with it, while the staffing and the maintenance were being on stand down or put on furloughs. Here we had to actually put aircraft into parking programs, and there was such a high volume, we just couldn't get it fast enough. And the last element on unexpected change was the unknown availability of consumables and materials. everybody had demand for the consumables and materials. So everybody was rushing out for orders. And of course, with the freighters not flying or the belly space available for commercial aircraft not available, we were having difficulties actually getting consumables and materials. So we had to actually find out, we had to get deviations for those. So the key element or the key actions from here was doing a comprehensive risk assessment. And with that comprehensive risk assessment, we were able to introduce effective controls. We also had to go through the process of updating our internal processes and also updating our work instructions to manage this rapid change. So you can see we took the risk assessment and we took a comprehensive view of the risks and the hazards to manage all this unexpected change, because it was something that we were not faced for, not prepared for. The second element in this slide is about managing continuing airworthiness, and to that we talked about the airlines being unprepared. So were the OEMs. The OEMs were not ready for such a mass grounding. So what is happening was they constantly were updating the instructions of continuing airworthiness with approved deviations. So we as a CAMO had to monitor the changes through the AMMs, the temporary revisions, service letters, and the technical adaptations. And we also had to ensure that we had effective tracking controls, because some of the airlines were in lazy flying. So they were operating for a few days and then one flight and then coming back and on the ground for 7 days. So we had to make sure there was a consistency on inspection programs, transitioning the aircraft in and out of parking, and also the multiple repeat intervals. I mean, there were 7-day intervals and 14-day intervals and 30-day intervals, and all that stuff had to be effectively managed. So to manage those changes, we had to actually upskill or up-resource, because we needed staff to monitor on the CAMO, to monitor and validate, to ensure compliance with the latest ICAs, and also had to rework our existing task cards to take care of the changes. I mean, there were so many changes coming in almost every week or every other week. Operators are providing feedback to the OEMs, and the OEMs are updating the ICAs, sending that back to us, and we had to update our task cards just to make sure we remain compliant with the OEM requirements as well. The next bit was, of course, program adjustments, and we did a lot of work on adjusting our programs. We just didn't take the standard parking program that the OEMs had produced. As I said up front, we had to protect the valuable assets, so we had to optimize our maintenance frequencies. We set up engine and APU runs at frequencies that were far more frequent than what the OEM suggested. Initially, for example, the CFM 56-7 was running on a 30-day engine run schedule, but we, at the start of the program, we brought that down to 7 days. We wanted to get the engines and APU running every 2 days. That gave us the opportunity to operate the aircon packs, to ventilate the cabins, and to manage relative humidity as well. So it gave us that opportunity to get that fresh air going to the cabin, ventilating the cabins, and to control the relative humidity. Fuel testing is another key element that we had to manage as well. So we were doing rapid and frequent fuel testing and treatments if they were required. We did not have to use biocide, but we had the equipment if we needed to use biocide. But with biocide, you have to be very careful about the ratios, and also very careful about how the biocide chemicals were injected into the fuel tanks. So all this fuel testing was just purely to manage the microbiological growth. Defect management was another thing. So early identification or early reports of the defects coming in would actually impede deterioration by fixing those defects early. And some of those areas, for example, were corrosion. Early on in the program, we found engine lip skin corrosion coming up. So we introduced 7-day cleaning programs for the lip skins to prevent corrosion from propagating or even deteriorating the lip skins, and those called lip skins. Bird and insect nesting preventions, we could see that, orifices that the birds and insects were finding, we had to plug those as they were reported, so we wouldn't see nests or whatever being built up within the orifices that were hard to find. And of course, the final bit over there is parking and storage in accordance with the environmental conditions. As I said earlier, we were not parked in good areas. We had to make sure that we protected corrosion, or we had CIC applications on the areas that were unprotected. just to make sure that we were looking after the assets. So the actions from this, the program adjustments, was to customize the local conditions to manage the deterioration, the damage and defects from that as well. The fourth element, of course, was communication. So communication was absolutely key for us early on in the program. So we set up regular updates on deviation and extensions as published by the OEMs, identifying program issues and adjustments. So we communicated that, and any of the optimizations as well. So we set up communication groups with the regulators, so regular contacts with them, with the camo, all the camo management as well as with the AMO, so they could see what changes were coming through, how the deviations were going to impact, what was feedback format. Accordingly, we updated our risk registers just to make sure that we captured the risks of what we could see coming down the future, so we could actually have a good optimized program. So as I said, the key takeaway from this slide is to manage continuing airworthiness during parking, and which helps us to protect the valuable assets and protects our CFA. Well, this is all about 2020 when we were putting the airplanes back into the parking program, and we had to manage them during parking. Then came the upswing. The air travel demand was back, and then the airline wanted to bring the airlines as soon as possible back into service, because the pent-up demand for travel, even though in Australia was just domestic travel, we had to bring the airplanes fairly quickly. So we had to have some considerations, which you will see on the next slide, about bringing the aircrafts back into service. Next slide, please, Geraldine. Yeah, some of the key considerations for returning to service was, of course, the risk management as well. So we had to make sure that we considered all the identified risks and hazards at the start of the program and all along the way. As you know, we had a few months of managing the risk. So we had to reconsider those and see what risks we had with returning the airplanes back to service. And part of that was configuration control. So all the configuration of all the allowable configuration on the airplane and actions to address any gaps. So basically, if we were going to put an airplane back to the service that didn't meet the configuration requirements, especially with hardware and software configurations, then we had to make sure that we cover those existing gaps. Then again, as I mentioned earlier, there were parts that were not available, or upgrades that were not available as well. And we had to address any aircraft components or parts removed for off-wing maintenance, or that were taken off wing for storage, or any parts that were robbed, so cannibalization as well had to be considered. So we had to make sure that we had key considerations for the configuration of the airplane as we were returning that back to service. And finally, one of the other key considerations was maintenance. So the COVID impact everybody, including the AMOs. So here we had doing deep preservation tasks that were not familiar with the AMO. So how would we actually bridge that gap for that performance of non-familiar tasks? Training and recertification. So what happened to the licenses? What did they need retraining? Did we have to recertify some of those AMOs? So as we were ramping up, we had to make sure that the AMOs were ready as well. So they had the training and certification to help for the maintenance of the aircrafts returning back to service. There were massive transport constraints as well, with the lead times of materials and shipping delays. And it wasn't just the lead times that to get parts in, or even shipping delays. Some of the components that were sitting in the shops, we had long TATs. The component shops were also on stand down or lockdown, and we couldn't get parts coming out of it. So what would be a normal 15-day TAT was sometimes 60 or 90 days. So we had to look at those and see how those constraints were going to impact our return to service as well. And finally, I put a point here on return to service, or the lessons learned. That was key to us right from the start. We analyzed everything that was coming out post-operation and introduced preventive actions. Not all of it was related to parking programs, but we just had to make sure that an aircraft came out of service, it was ready for operation, it was in operation, and we were getting these defects coming up, or we were finding the defects in heavy maintenance. So we had to make sure that they were not, if they were connected with the parking program, that we took actions to deal with that. So for example, as of recently, we're still seeing corrosion on spoiler cables, so they've been lying there for a while, not operated, and we were seeing corrosion on spoiler cables. So we introduced programs in place as the airplanes were coming back and how we were going to deal with that. And another item that we've seen fairly recently is leaks from the landing gear, because the scraper rings are pretty dry. And while the airplanes were parked in a position and not moved or not towed, the scraper rings were pretty much dried up. So we had to make sure that the few airplanes that were showing leaks after we started towing them around was the fact that the scraper rings being dry, they were rubbing against the chrome plating of the lower strut. So just lubricating the strut and cleaning it out would actually prevent this problem from happening, which is what we've introduced. So these are some of the lessons learned. I'll talk about that more in a summary slide. So if we can go to the next slide, please. Yes, so here at Virgin, we introduced a 4-step process for a safe and efficient return to service. This is not new. Most of the airlines would have had similar processes, but I wanted to emphasize how important it was to have a program of what we were going to do to bring the airplanes back. And the first key element of that is scheduled maintenance. So a lot of scheduled maintenance that needed to be acquitted, and we had to make sure that maintenance was done before the aircraft returned to service. We also had to look on mandatory instructions for continuing airworthiness. For example, any new ADs or ASBs that came up during the parking program. The 5th stage valve of the 737 engine is a good example of that, just to make sure that we were in compliance with all the ADs and some of the alert service bulletins that came out, and overdue maintenance. So all those maintenance that was overdue during parking, especially those calendar checks that were overdue. How do you work this out? So some of the deviations that you could work with. For some of you who may remember the presentation from last year that I presented, I did talk about a model that you could use to acquit overdue maintenance, or how you could actually use that to get aircraft from a position that an aircraft was parked with little or low maintenance capabilities to fly it into a heavy maintenance or into a normal maintenance facility. And you would need OEM justification and regulatory approvals for that as well. Deep reservation, so basically that is prescribed in the AMMs and service letters, and what maintenance you need to do to actually bring the airplane back into service. Open defects and rob parts, so just make sure that, you know, as part of the deep reservation, all the open defects were acquitted, and rob parts as well were taken care of as well. Loadable softwares, as I talked about, NDBs or terrain databases, and part per engine runs as well. Then we went to the next phase, which is optimizing. So as the airplanes were coming back into service, we had a lot of issues that we were seeing were raised as they were coming back into service. So we introduced some significant operational checks, like for example, the nose cowl anti-ice valves, bleeds and isolation and pack valves, full lighting checks as well, internal, external, cockpit, emergency, getting the cabin readiness, deep cleans, carpets, furnishing, galley, water boilers and coffee makers, and all that stuff are running okay, as well as the faucets and the facilities in the lavatory as well, and of course an external wash, getting the airplane ready for service as well. And that was all part of the experience that we learned with the airplanes going back into service. And finally, we introduced a final step, which is validation. And the validation, of course, was, as I talked about earlier, was the maintenance provider capabilities, but also validation checks before the airplanes got back into service was we introduced primary and secondary flight control checks, including spoilers, speed brakes, flaps, and slats. We just kind of got them operated. We did extensive pre-flight checks, critical systems, including the alternate and standby systems. And bear in mind, not all of these are covered in the deep reservation checks that I talked about earlier. These were all additional items. In fact, we almost did like a production acceptance when we accept new airplanes from production. We almost went through everything with an extensive checklist to make sure that we took all the critical systems, as well as made sure the alternate and standby systems were operating as well. We also introduced what we call the full thrust takeoff, just to make sure that we had the capabilities, and also the full thrust takeoff then resulted in a verification or a shakedown flight, which was a non-revenue flight. So these were all additional items that we introduced to validate that the aircraft returning to service was safe and efficient. So our pathway for return to service, we were giving the business back airplanes that were absolutely ready for service, and we had done all the validation optimizing checks before the airplanes return into service. So can I get the last slide, Geraldine, please? So in summary, I would like to just capture this last 3 or 4 slides. In summary, the key elements for returning aircraft safely back into service is a comprehensive risk assessment to manage the unexpected change and depreservation. So all those changes is a full risk assessment is absolutely fundamental to this whole process. Effective continuing airworthiness controls during parking, storage, and restoration was also required. A detailed analysis of the maintenance requirements will create that pathway to safe and efficient return to service, and then introduce effective monitoring of post-RTS reports. So as the aircraft return to service, some of the reports coming in, how you're monitoring them and how you're actually taking action on them for the airplanes that you would see coming up in the future as emerging issues as well. And finally, there's an IATA document that is called Guidance for Managing Aircraft Airworthiness for Operators During and Post-Pandemic. So that is an IATA document. It's actually inputs from operators based on experience, including ourselves, which we inputted some of our experience and our best practices and lessons learned. This document also has a safety risk assessment template that you're all familiar with, but this one actually gives you samples of most common hazards, risk, and mitigation actions, and that's the link that you can access it. You can go to the IATA.org website and you will find the document there as well, which is just some excellent guidance material, which is based on best practices and lessons learned. So the next slide, please. So that's it from my side. I'd like to thank you for listening and thank you for in advance for your comments and your feedback as well as your questions. So Chris, if you have any questions for me, I'm happy to take that now.
Thank you, Keith. Beautiful presentation, a lot of input and detail for us.
Chris, I can't hear you if you're asking a question, Chris.
You cannot hear me? Maybe I think I'm not on mute.
Still can't hear you, Chris.
I can hear you, Chris. Yeah.
Can you hear Geraldine? I think you cannot hear any
can you
of us.
hear me?
Geraldine, can you hear me or can you hear Chris?
Yeah, I can hear both of you.
I think you cannot hear us. We can hear you, but you cannot hear us. I think we have some technical difficulties.
Sorry, Chris, I can't hear you.
Yeah. I'm typing in the chat box.
Hey, Geraldine, can you hear Chris or can you hear me?
I think we have a few technical difficulties with the sound with Keith.
Yeah.
Let's try one more time, and if it doesn't work, maybe we'll wrap up.
I don't think he can hear us. I texted him the question also, but
Chris, you may be centrally muted because I can't hear you at all.
No, because I can hear Geraldine. No, something is from your audio on your side, because I can hear Geraldine and she can hear me. So definitely. The old, I wish I knew the Morse alphabet so I can send him some maybe smoke signals or something.
People say that handwriting is dead. It's not. When technology fails you.
Thank you. The question is, what is your relationship with OEMs and lessors? So I'll take the OEM question first. So our relationship with the OEMs is very, very strong. At this point, we had OEMs working very closely with us in terms of supporting us with the parking programs and returning to service. We had to have that quick circuit breaker in terms of getting questions across to the OEMs via our local field service reps, who were very supportive of us. I think, Chris, that with IATA and with the OEMs, they've been absolutely supportive in for the airlines in coming up with deviations, coming up with solutions, understanding what the airlines were going through, and giving us those deviations based on our local conditions. So I think the OEM solutions were pretty good. In terms of the lessors, yes, I mean, as you know, we did have issues through administration while we were in the parking program, and we were communicating with lessors in terms of as a stakeholder, as communications as to what we were doing on a regular basis with the airplanes, how we were looking after them. They were actually coming in and checking and understanding the the inspections that they were being carried out at regular intervals, and that the assets were being protected. They did come and do asset inspections. They came and looked around. They came and looked to see how they were protected, whether they were well protected in accordance with the AMMs, or whether we went over and above that. So in answer to both the questions, Chris, yes, we had some great relationships with both the OEM, and I would like to thank all the OEMs for the support as well to this whole program. So that's a good question, Chris. That's a very good question. So the current condition is, your question is, what's the current condition? So Virgin Australia actually returned almost all the airplanes back to service at the start of the year. So by June this year, we had all the airplanes flying. The travel had returned, the demand had returned back into the country for domestic travel, but then it went into lockdown again. So two of the biggest states went into lockdown, which resulted in a significant drop in demand. So we had to actually put most of the airplanes back into a lazy operational flying. So currently what we have, Chris, is that we introduced what we called a 13-day parking program. So it is a parking program that's customized by us. We work with the OEMs on that. So we fly the airplanes every 13 days. So we don't have to, keep flying it every 6 or 7 days. And we've customized the program for that. But we are hoping that the build-up now occurs. The vaccination rates in Australia is going up quite significantly. And we're hoping before Christmas this year, so November, December, we'll see the demand coming back in and the airplanes will be back into service. So we have not put our airplanes back into active storage or into long-term parking. We're now running with what we're calling a customized 13-day program. Okay. Thanks very much, Chris, and thanks very much for everybody. Thanks for listening. And it's 11:30 at night, so I'll say good night from Australia. And we wish you all the best and stay sane and stay safe. Thanks very much. Bye-bye.
Thank you, Keith. And with this, if we can have the last slide, Geraldine. So if you would like to be more involved with the maintenance group, please click on the link. You will receive, you will have access to the slides, of course. And also, if you would like to learn more about our technical operations groups, also click on the second link available there. And finally, there is a whole kind of library of documents that you can use from the IATA website. And this is the third link that you see on the screen. So please feel free to go there and download the documents and listen. They are constantly updated, a majority of them that are related to be updated. So please feel free to download. And with this, I would like to thank you once again. Sorry for some of the technical difficulties that we had. In the presentation, you will have the emails of the people who provided us with their presentations. Feel free to send them your questions directly. And if you have any other question, please send us an email or get in touch with us. The next webinar will be next Wednesday at the same time, and we'll discuss more about the current IATA Rolls-Royce agreement. Thank you again for your participation today. Have a nice remaining of the day, wherever you are. Bye-bye.